In this video, we'll take a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. As usual, we'll be starting with the gold charts on the 1 hour time frame. And as you can see, gold has been in a solid bullish trend, and we've been tracking this trend line all the way back to the beginning of the year, right? And now we've seen multiple bounces off this area of value. Last week, we talked about the possibility of price bouncing off this trend line, which also coincides with this area of value. I know we focused more on this area of value over here, but if you take an extended price movement all the way down to these lows, you see it also aligns with this previously established area of resistance, now turned into a support level, right, on the 4 hours time frame, 1 hour time frame, and the 2 hours time frame. So on all time frames basically. So we got into this area of value, which may signal a potential breakout of this trend line. And if we're not patient enough to see what market does, or what market was going to do, in hindsight, it would, seem like a good opportunity to go short, but turn out to be a fake out for those who are intended to go in aggressively on the short. But meanwhile, the area of value stopped this from going on. And if you pull up the moving averages on the 4 hours time frame, for example, so 200 moving averages on the 4 hours time frame, XMA and EMA as I use, you see it flushes with this area of value, the trend line, and that led to a good bounce, followed by an inverse head and shoulder, as you can see on the 1 hour time frame. So going back to the 1 hour time frame, you can see the inverse head and shoulder. So the head, right shoulder, left shoulder, slant neckline with a good breakout for a confirmation to go long, right? This was a no-brainer. I did go long, but the funny thing is I got out just too early, right? So I'm going to get rid of the moving average right now, so this chart is clearly visible. So I got in at the breakout and I exited the trade around these price levels because I thought, there's a good chance we reverse a little before we go up. But it's just been a straight movement to the upside, and I lost over 2,000 pips, as the case may be, on this movement. But more opportunities are going to come in the future. So right now, here's what I'm watching out for to go long on gold. So for me to go long on gold, I'm waiting for a possible retest back into this area of value, get a confirmation of a bounce, and then a movement to the upside. This would be my confirmation to go long, where my entry is going to be after the breakout, or after the bounce, excuse me. Stop loss is going to be underneath the bounce, and my take profits first one is going to be around these highs, and I trade the rest as I go higher. So that's my first case scenario. So second case scenario will be waiting for some sort of bullish continuation pattern. So not necessarily a retest, right? So something like this, get a little pop-up, a consolidation around this area of value, right, giving us some sort of a bullish continuation pattern followed by a bullish breakout to go long. If this happens, you want to go long after the breakout from this consolidation, right? So it could be a rising wedge, it could be a falling wedge, it could be a symmetrical triangle, an ascending triangle, a descending triangle, as the case may be. Provided we do get a bullish breakout after that consolidation, then that will be your confirmation to go long. Stop loss can be underneath the consolidation, and you can trail your positions as we go higher. This is just a no-brainer. This is how I'm trading, or I'm planning to get in on gold again if the market do present us with another opportunity to go long, because this one was just a glorious opportunity, no-brainer. You should have gone in on this trade. So for those who caught that, congrats to you. Guess you made a bank on that. So right now, the consolidation over here would also require the relative strength index to cool off a little on gold, because right now I seem close to the overbought level, and we just got off the overbought level slightly, but price still seems to be bullish. So right now I'm going to look for more consolidation, see what market does, then we go higher. Alternatively, I know you would want to go short here, bounce, consolidation, and a short position. I wouldn't be going short here because right now gold is extremely bullish, highly unpredictable for a bearish case scenario. That's why I'm going to be sticking with my bullish case scenarios and see how the market evolves, right? So mind you, even if we get a reversal to the downside, you may be expecting price to bounce off of these levels. We may not. We'll be likely maybe come down, right? Maybe halfway before we get that reversal to the upside and continue of the bullish trend. So markets do not always respect this area of values to the letter, right? As you would expect, you could get a flash crash to the downside, consolidation, but the point is getting a good and possible area of value where you can go long in the direction of the trend, right? Giving you a better risk to reward ratio. So this consolidation, for example, if this happens, You want to go long after the breakout from this pattern, creating a bottom or a double bottom, as the case may be. Your stop loss want to be underneath the last bounce. Then your take profit, first one coming around these highs, and you trade the rest of the positions to go higher. So no one can really tell you exactly how the market is going to, play out, or exactly how the price action is going to play out on charts. But we can at least give you something to watch out for, just so when those things, comes up, you know exactly what, to do, right? Whether you're going short or going long. For now, I'm not going to be talking about any bearish case scenario because it makes no sense to talk about bearish case scenario right now when the chart looks like this. So I'm only going to be looking for opportunities to go long, and if anything changes, hopefully next week we're going to review this chart. Moving on, we'll be talking about Nasdaq. So Nasdaq, real quick, massive volatility on this, and you should be very careful while trading Nasdaq. So if you're taking these highs, for example, these are price levels to pay attention to when trading Nasdaq, right? So Nasdaq US 100, I'm watching out for this area of value over here. So I'm watching to see what price action we're going to see this week, for me to spot a good trade opportunities for the week ahead or this coming week, right? So I know I drew this trend line, but I wouldn't be paying attention to this because we have just 1 and 2 bounce. But the major one right now that seems to catch my attention is this one over here. So this trend line, because we have 1, 2, 3, 4, 4 good bounces of this area of value. We just made it some sort of a double bottom with good bounce move to the upside. And if you zoom in, so mind you, this is a 1 hour time frame. If you zoom in, you can see that we also just bounced over this area of value like this, right? So this price level seems to be respecting this area of value, and what I want to see this week is price pushing towards this trend line, consolidating a little, and giving us a good bullish breakout to the upside. If this happens, I'm going to go long after the break of this trend line and the break of this consolidation, the one we're potentially going to have if or when price gets to this trend line. And stop loss would be underneath the consolidation, at least to the breakout. Take profit, first one is going to be around this area of value. So we have a clear area of resistance over here. And the second one is going to be around these highs. Then if I have more positions, I'm going to trade them as we go higher. Mind you, I have no idea how this pattern is going to play out, but what I'm watching out for in summary is waiting to see what price does when we get into this area of value, so this trend line. So when price gets to this trend line, I'm going to watch to see how price reacts with this trend line. Do we just break across it like knife cutting through butter, or do we get rejected for a bit, get consolidations, and then try to break out again? So if this consolidation pattern and breakout happens, then I'm going to be going long on this. My stop loss here gives me a better risk to reward ratio with my take profit target around this place and the second one around these price levels. For a bearish case scenario, I know you want me to talk about the bearish case scenario for Nasdaq. I wouldn't, because I wouldn't be going short right now, because the rhetoric coming from the United States President Donald Trump seems to be cooling off and easing off slightly from the hawkishness of the conversations related to tariffs. So that's cooling off a bit. So that's why I think market is going to rebound hard. Maybe if not this week, the upper week. So for now, I'm staying clear of bearish case scenarios, sticking to the bullish case scenario, and this one do look like a very good opportunity to go long if we do get that consolidation around this trend line followed by a good breakout to the upside. That's it briefly for Nasdaq. Lastly, today we'll be talking about crude oil. So crude oil, real quick, we had a very good breakout from this area of value. So going to the 1 day time frame, for example, yes, so 1 day time frame, you can see we've clearly broken this area of value. So this area of value dates back to 2021 of May. We seem to have traded be trading below that area of value right now with a very good candle close below. I do think it is logical to expect price to come back into this area of value for a proper retest before falling down like a rock, right? So this move to the upside here is what I'm trying to catch. When we go to the lower time frame, I'm show you what I'm watching out for right now. So going out to the lower time frame back, that's 1 hour time frame. As you can see, we seem to be creating some sort of inverse head and shoulder like we did on gold, but this one with a clearly defined neckline. So I'm just going to pull up a trend line. So this is a neckline for the inverse head and shoulder. So this is the head. So this is the head. This is a right shoulder and this is a left shoulder. There's a possibility of a neckline where I expect us to hit, maybe get a small consolidation followed by a bullish break to the upside. So I'm going to zoom in a little so this chart is clearly visible. Give me a minute. Yeah, so this is what we have on screen. So right now I'm already long on this trade. So for those who aren't in yet, I think you can look for an opportunity to go long when the market opens. That's if you do get a chance, because my entry was placed around this price level, right? So around this price level, and this will mean bounce at this, shoulder level, creates some sort of an area of support. So you can see it bounce off this level, also bounced here, and now we seem to be creating some sort of lows, higher lows at that, and a move to the upside, bullish move to the upside signifies bullish momentum. So that's why I got in on this this price level. So my price target is around this dotted line here. So this is an alert to let me know that price has got to my target, and I'm going to, my stop loss is being placed underneath this area of value. So now this is a very good opportunity for me, in my opinion. And if you're not in yet, the best thing to do, watch out to see what price does. Maybe we get into the neckline, get a good consolidation and a good breakout to the upside. If this happens, then you want to go in here, stop loss underneath that consolidation, and your take profit targets would be around these price levels, right? Maybe around these highs over here. So I'm going to get rid of this moving average because it's messing with the chart right now. So without the moving average, it looks cleaner, and this is how you should trade crude oil. Alternatively, if you don't want to wait for price to get into this neckline, if you're lucky enough, we may see price, we may see price dumping a little when market opens, maybe all the way to these price levels, before we see a pop to the upside, right? So when we get a move to the downside, then you want to enter as low as possible so you can get a very tight stop loss, because logical price level to place your stop loss will be underneath zero value, because when price gets here, then this pattern will be invalidated, right? So that's the reason why you want to get an entry as close to this area of value as possible before you go long. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. Please let me know if you disagree or agree with me with this week's setup, and leave your thoughts in the comment section down below. That's it from me, guys. See you next week.